Let's get to Rick. We've got some news, Rick, on jobless claims.
We certainly do, Joe. September retail sales, let's start out there. Up 0.4%. That's better than expected. And 0.4, at least up till now, with unrevised, follows some solid numbers going backwards. We had up 0.1 last month. Doesn't sound great, but prior to that, we had 1.1. So we're holding on to the gains. We're not slipping into any negative territory on these numbers. And if you strip out autos, it improves. It improves up 0.5%, up 0.5%. That equals where we were in June. To surpass that, you have to go to March. Now let's strip out autos and gas. Up 0.7%. That's the best since June when it was up 0.8. And the control number, well, the control number is when you synthesize everything, you come up with a core. It's up another whopping 0.7. That's pretty powerful considering the rearview mirror up 0.3 and up 0.4. Cumulatively, pretty strong. And there's revisions coming in. They're actually 0.1 better. Now let's switch gears, shall we? Initial jobless claims. 241,000. We're expecting a number close to 260,000. In the rearview mirror, 258 became 260, so we're down 19,000. But there's a lot of asterisks here, whether it's Columbus Day holiday, whether it's some of the storms, hurricanes, may have prevented some of the states from keeping up with their, putting in their information. So we want to put a little asterisk there on continuing claims. Of course, it's the 19th month over 1.8 million. We have not seen 1.9 million since November of 21. This number is 1,867,000. That would be the biggest since the last week in July when it was slightly higher. And last, certainly not least, Philly Fed. This is an October read, expecting a number around 3. It's triple that, 10.3. That's the best number since just July when it was around 14. If you look at interest rates, they moved much higher. As I've been talking about the last couple of days, if you look at what propelled interest rates higher, it was the 10-4 release of the September jobs report. And we moved over 4% in the 10, but all maturities jumped. And they arced. They came right back down basically to those levels yesterday in anticipation of what is probably the next most important number, and that was retail sales. Proved to be pretty good. We are now looking at a yield that's around 407-ish. Prior to the release, it was 403. So right now, you're looking at a number that's up about 6-7 basis points on 10s. 395 is where we were on 2s. They leapfrog up to 4%. They're now up 6 basis points. And the fact that we've breached 4% in a 2-year tells you how important some of these metrics that are top-tier measurements of the economy are to investors trying to handicap what the easing cycle will be and trying to parse through weird stories about it's really sad that the Fed's data dependent. Shouldn't data dependent be their central theme? Joe and the gang, back to you.